Hi, welcome to today's episode. In our previous episode, we completed our trial balance, which shows that it has indeed balanced. But then there is a little bit of flaw. The flaw is that should it happen that the date doesn't follow or that it doesn't consecutively follow from the comparative to the current period, it means that there will be a lapse in the retained earnings. And to address that, we are going to add a new dating. So this date is going to be for the lapse between the retained earnings. So we are going to make it from the past. So from the past from and then to the to we are going to make it follow this. So this minus one. So we are going to name it current lapse CLFRN. No, CL2. So this one is the current lapse 2, right? This one is the current lapse 2. Okay. So we are going to name it current lapse 2. And then the P&L, what we are going to do is that we are going to copy everything here to this side. To this side and this side. And this one, we are going to make it as at the CL2. We are going to make it CL2. So this one is going to be December 2020, right? And this one, we are going to make it the ending of the first period, which is the comparative period, which is going to be this one. And we already know it is the P2, the past two. So we are going to change this one to P2, all right? So this one is the past two. Okay. So what we are going to do is that from this side, we are going to also copy the note that relates to the profit and loss. So the first one has to do with all of these ones. We are going to copy everything and bring it here and here. Now, wherever we have C from, it is going to be CL from, which is the closing loop from, the current loop from, right? So let us replace all. And where we see C2, it is going to be CL2. Let us replace all. All right, so we are done with that. So where we have COTO, we are going to change it to, I think that one has to do with the heading. So COTO, we are going to change it to CLTO. All right, so we are done. Then we do same at this side. We copy from this side up to the end, and then wherever we have CO from, all right, I think this one, there are places where we have CO from. CO from should be changed to CL from, and wherever we have CO2 should be CL2. All right, so we are done with this side. Let us go to the other side. So here to wherever we have CO2, it is going to be P2, P2, and wherever we have CO from, it is going to be P from. All right, so we are done. Let us check to see if nothing has changed over here. I think there's a mix up once again. We don't have anything called CL from, or what we have is P from. Okay, so let us correct it. And the same goes to this side. We don't have anything called P from. Let us check it well. So this one, it is currently greater than P from, and P2. All right, so I think now it should work. It should work. So what we want to do is that for the comparative periods, for the comparative period, let us assume let us assume we have some transactions for say 9th, 19. Let's see, there's a revenue of, this is 2019. We had a revenue of 1 million or 100,000. Let us see how it is going to be presented here. Okay, so we see that it is captured here and here, right? And giving us a profit of this much. It is giving us a profit of this much. But then when we come to our trial balance and our balance sheet, we have a variance of 100,000, right? Because we've not connected here too, we have a variance of 100,000 because we've not connected the comparative period to the current period. So that is what we are coming to do now. So we go to the statement of changes in equity, and here the opening balance, it is going to be all of these plus the profit from the previous year. This one is the comparative period, right? So it is going to be plus the profit from this period. Then we are good to go. Now, in the current year too, the opening retained earnings is going to be all of these plus the comparative, the current comparative opening, sorry, profit for the period. You get it? So now everything is going to balance. You see, in the current year, we have a balance sheet, and in the previous year, the comparative year too, we have a balance sheet. So we've dealt with that one. If you have any questions, you can call and then I will try and explain everything for you. All right. So the next thing we need to do is the taxes. So let us see if we introduce a tax. Let's see taxes in 2020. Assuming taxes in 2020 was say um, other expenses. Remember, taxes is in other expenses. So income taxes. Let's say it was 200,000, but we didn't pay by cash. So definitely it is going to be a liability because if it were to be a cash transaction, we are going to use it in the cash book, right? So let's say it's other payables. Now let us see the effects on the financial statement. Okay, so here it is fairly represented. It is fairly represented, and we can see here, can see here that we have a variance of 80,000. Okay, so other payables. Oh, okay, so we've not linked this one to the new comparative period. So let us start from the stated capital. Let us go to the statement of changes in equity for the comparative year, which is this one. statement of changes in equity, which is this one. So we are going to use this side and drag it down. All right, so now everything is balanced. Let us check for this side. And this one too, we've not linked it properly, so we need to correct it as well. So here, retained earnings, which is C210, C210. Oh, okay, so this one is picking the opening, and that should be the right way. So it has picked the opening. So the variance we are having is 20,000, which means it is the tax element, right? So other expenses, where do we have the other expenses? Okay, so other expenses, I think we didn't work out for the taxes. So that one too, it means that we need to work out for that. And for that one, we can either connect it to the P&L, or we use the formula, debit formula. So but then let us do an easy work. Let us just connect it to the P&L, right? And we can easily drag it here, and then we just cut this one and then paste it over here, and then we are good to go. So our report is now taking shape. Let us drag this up a little bit. We can hide this side since we are not going to use it for now. Okay, so it is now taking shape. It is now taking shape. It looks nice. Now going down, we left something out, which is the gain or loss on disposal of assets. Okay, so this is what we are going to do. Where there is a disposal, we are going to use a formula, right? So it is going to be this. We are going to link it to the trial balances, um, proceeds from disposal of assets. So it is credit, right? So it is going to be this minus, then we come to our PPE. PPE, we are going to make some formula. So the adjustment or the disposal side minus the accumulated depreciation side for the disposals. All right. Once we are done, we click on enter. So this is going to work for the loss or gain on disposal of assets. We are going to do same for the comparative period, and it is going to be the same trend. So we go to the trial balance, we pick proceeds from disposal of assets minus, then we come back to our PPE schedule, then we also pick the comparative period, we pick the adjustment, and then we less the accumulated depreciation for the comparative period. Let us check to see that we are not using the same thing. Oh, I said it. So here we rather pick the comparative instead of the current year's PPE. So let us go down again and do it. Sorry, let us go to the PPE schedule. All right, so PPE schedule, this is the current year. Let us select this side minus this side. All right, so this time around, when you compare, there are two different linkings. So let us save it. Now we need to do same for the comparative period. And to do that, it is going to be a little bit tedious, but then we would have to do it. For that matter, we would have to copy the PPE over here. We would have to copy everything and paste it to this side as well. So this one begins from this side. So let us paste it here. And we are going to link this side to this. So let us drag it down. And likewise, this one too, we are going to link it to this side and drag it down as well. Okay, so once we are done, we can change this one. So this one, what does it become? It becomes CL from. Sorry, here it is going to be P from, and it is going to end in CL2. All right, and um, the comparative period, it is going to begin from P from P from to P2. All right. So we are going to do the same thing as we did here to this ones. We are going to highlight everything. So I can see we have P from, and the two has to change. So the C from has to change to P2 to CL2. Sorry, for the current period, it is going to be CL2. The opening balance, Right. So this one, beginning of the year, it is going to probably be zero, right? So what we are going to do is that we are going to make it from the PCF from, we are going to change it to PTO plus 1, right? So from C from to PTO plus 1, we are done. And this side, for the additions and then adjustment, wherever we have the C from plus 1, it is going to be PTO plus 1, right? So let us replace everything. And where we have C2, no, let us undo it first. All right, so from the C from, it should be P from, right? So we are now correcting everything. And where we have C2, it should rather be P2, right? Sorry, here it should be CL2, comparative lapses 2. All right, so we are done with the comparative here. Now when we come to this side, so this side is gonna take the same trend. It is going to take the same trend, and it is going to be wherever we have, I think this one, it begins from P from, so the CO from will rather change to, P from. It's rather gonna change to, let me check it well. So this one is a P from, and the opening balance, all right, so I think we are on track. Okay, we are on track. So I think that is what we should do. That is all we should do. So for the comparative, it is going to be the P from, and the CO from should have to change. Okay, I think this one is okay. So C from to this side. All right, I think so. This one looks good, but here the addition side, it is going to be P from, P from. All right, so here it is going to change from C from, to P from, and COTO to P2. All right, so I think we're on track. Now let us make some entries to check to see if everything is going to go correctly for us. So we need to check the profit aspect. We need to correct it here as well. So in the notes, um, where we have the gains to, we need to do the correction over here. It means that we need to bring the the proceeds from disposal of assets, right? The proceeds from disposal of assets. We need to bring that line over here as well. Okay, so we need to change this formula. Um, so it is going to start from the C from has to change to CL from, sorry, P from. Let us change it back. And then the C2 would rather change to CL2. Let us replace it. All right. Then we go to this side where we have CO from. It has to change to P from. All right. So and then the has to change to COTO has to change to P2. Let us replace it. And I think that is all. Now let us generate our profit or our gain or loss. So it is going to be for the current year, it is going to be this minus into brackets for the current period. This is the disposal, and this is a deduction for accumulated depreciation. All right. Then we do same for the comparative period. So we pick this minus our comparative assets minus the accumulated depreciation. Then we are done. So we can now check for the calculation of profit or losses, right? And everything needs to balance. Do we have revenue from proceeds? Wow, proceeds from disposal of assets. Now let us add some journals for the proceeds. So let us select other income, and this one let's make it proceeds, and obviously it has to be receivables. Let's assume we bought it on credit. Sorry, they purchased it on credit from us. So other receivables, right? Oh, I've turned it around. So it has to be a debit balance, credit balance instead. So this is an asset to us. So it has to be receivable. And here we are going to make it other income and proceeds. Okay, so let us go back to our report. And what are we seeing? Why is it appearing twice in the comparative periods and in the current period? Okay, it doesn't matter. Now let us assume that there was a depreciation aspect. The cost aspect is say so this one is in February, right? So the same 2nd February 2020, the cost aspect, we need to debit the disposal account and then we credit the assets. So with the cost, right? So let us scroll down. PP disposal and adjustment. Now let's assume it is furniture and fitting, right? And the cost is, let's assume the cost is 30,000, right? Now it is going to reduce our asset. So we've debited the disposal. All right, so this is how we are going to treat it. Now, you know, when there is disposal of assets, the transaction is between disposal and then um, the cost element. We are going to transfer it to the disposal account and we credit it to the PPE account or the asset account. So in this way, our disposal account is going to be the gain or loss on disposal of assets. So we are going to debit our administrative expense where we can find our disposal gain or loss on disposal of assets, and the credit aspect, let's assume it is so disposal, it is furniture and fitting. Okay, all right, so this is it. Let us see the effect. Wow. Okay, so what I see here is that I think we missed something over here. This is causing us not to have the correct view as we are supposed to have. So let me see. Let me copy here and paste it. and see if it is going to work. Dragging it down. Right. Let us undo it. Let us undo it. So let us rather cut this and paste it here because I don't know what's happening. Okay. So this should work out for us. This should work out for us. And all right. But then the date was 2nd February. So we should be seeing it in here. Either here, either here or here. Oh, okay. Alright, so not seeing it here means that there is a problem. Chart of account. Um, okay, so it means that we need to copy. We need to copy. Something is not right here. And I believe it is the linking to the chart of account. Right, let us open this wide and you realize that so this one, the chart of account, this one is linked to Q4, but I believe it shouldn't be Q4. This one is furniture and fitting. Let us go to the chart of accounts. Furniture and fitting for accumulated, sorry, disposal and adjustments. So it should be J4. All right. So J4 up to the end. And I think it is not just that one. This place too should be J4, not Q4. Yes, though we are not capturing it. Why is this so? Okay, so let us go to the journal once again. Okay, so adjustment, PP disposal. And what do we have here? For the adjustment, all right, so let us go back. Yes, we have adjustment. So I think there's something wrong with the formula. and we need to decode it as fast as possible. So the adjustment, this one is J4, debit item, credit item, debit item, credit item, sum if the date. Okay, so from, oh, okay, we've not changed this side. This one has to be, instead of C from, it has to be P from. Okay, so once we corrected it, everything is done. Now the C2, it has to be, C2 has to be CL2. All right, and we need to do same for the comparative here. Okay, so this one too, it's worked well. I think we're on track now. So it means that this place too needs to be corrected. Um, so here too, instead of Q, let us check the first one. It is J4. So let us replace anywhere we have Q28. Okay, so we are going to replace Q28 with J4. All right, and then we drag it down. I believe this place too needs to be corrected. So where we have J4, it has to be, where we have Q28, it has to be J4, and we need to drag it down. Okay, so let us check this side. So I think this side, if you look through the formula as well, the CO28, I don't believe it should be that. So let us check what should be the right account depreciation in the CO8. So the adjustment for the disposal and adjustment, it is L4. All right, so we are going to change this one, the S28 to L4. Let us replace this and this. Once we are done, let us drag it down and let us drag this side down as well. All right. Okay, so this tells us that we have a bug in here as well. Let us see here, JV4. J4. Okay, so here too we need to correct it. Instead of J4, It is Q28. So from Q28 to J4, let us replace it. Oh, so here it is rather J28. So let us replace it and replace here as well. Then let us drag it down. Here too, let us drag it down. Now let us come to this side. Here it should have been L4. So whatever we have here, which is not L4, this one too is L28. So L28 to L4. Let us replace it and replace this one as well. Now let us drag it down and drag this down as well. All right. Now let us check the dates in the journal. Here we are picking 2nd February 2020. So it is not expected to appear over here. Since it is appearing over here, it means that we have an issue with something. All right, so here it should be P from to Cl2, and the Cl2 is December 2020, right? December 2020. Oh, okay. So here December 2020. Here it is right that it is an opening balance, and here it is right that it was during the year since it falls within January and June 2020. But for 2020, 2019, it shouldn't reflect. Since it's here, it means only one thing. There's a bug in our formulas and we need to investigate it. Okay, so investigating it, it don't have to be C2, it has to be P2. So wherever we have COTO, it has to be PTO. Let us place everything. And now it is working. Okay, so the next thing we are going to do is we are going to insert a row at this side because I changed it to do something. So here it should be property, it should be the cost, but we can leave it as such and save it. Now everything is taking shape. Everything is taking shape. Everything is now taking shape, right? Everything is taking shape. So before that, let us make additional journal adjustments. Let us assume that on 1st January 2018, we had an opening balance of furniture and fitting. So let us make it furniture and fitting debit account. We had an opening balance of 200,000, right? And this one, it should be treated as opening balance. If you don't enter everything, it is going to give you an error. It is going to repeat this amount at wherever there is 00, there is blank. So you need to fill everything to the very end. So we go to equity and it is an opening balance. So opening balance, and let us see the effect. All right. So it is going to fall between 1991 and 2002, and it is also going to fall between 1991 and 2019. I think there is a back here as well. There is a back here. So we need to correct it as well. So it shouldn't have reflected as an opening balance. It should have been captured as addition. So it means that we are missing something and we need to correct it as soon as possible. So it should be P from. Let us investigate it. Oh, okay. So C from. So P from to comparative from. No, this one has to be C from, and the end. Let us confirm. The end has to be all right. So it has to be P2. So I think that is where the errors are coming from. So let us correct it. So CO from to P2. Why is this still showing as an opening balance? Wow. Okay, so it means that it is from the journal, right? So P from greater than or P from to P2, J4, P2. Oh, okay. Oh, okay, okay. So I now get it. This side it has to be zero throughout. So let us correct that. It has to be the opening balance would definitely be nil. It would definitely be nil. So P2 we have to change it to C and P from plus 1. All right. I believe you get it now. Okay, so it has been corrected nicely. And now we can see that everything is taking shape. Everything is taking shape. What we are going to do is that we are going to hide this after we are done. We are going to hide everything here once we are done. Okay, so we have a proceed from disposal. We're having a variance over here. And the reason is that we did not include the adjustment. We've not included the adjustment in our trial balance. So it means that we need to include that. Okay, so let us end here, and in the next session, we are going to include the adjustment in the PPE to the trial balance. See you in the next session. Bye.